Mila, I don't think people are focusing on the right part of the story. A 3-week ban ends and a major AI model goes live on a massive cloud platform. Everyone is talking about the politics.
And we're going to talk about the plumbing. And later, why a 19-fold profit increase can somehow be considered bad news.
I'm Milo.
I'm Mila.
This is AI Daily.
Let's start with the ban that just ended. As of July 5th, Microsoft has made Anthropic's Claude models generally available on its Azure cloud platform. This comes right after a 3-week government-mandated shutdown for Anthropic.
And this isn't a small-scale rollout. Microsoft is deploying this on NVIDIA's GB300 Blackwell Ultra GPUs. That's serious hardware, aimed at enterprise-scale distribution. It means any Azure customer can now access Claude's models directly, with all the security and data privacy guarantees that enterprises expect from a major cloud provider.
The context here is key. The shutdown was positioned around safety concerns. Now, coming out of it, Anthropic is immediately integrated into one of the biggest enterprise ecosystems in the world. Some analysts are suggesting the ban inadvertently handed Anthropic a massive marketing gift.
It's a very specific kind of gift. It frames them as the safe and vetted option in the market. If you're a risk-averse chief information officer at a Fortune 500 company, a model that just went through intense government scrutiny and came out the other side might look pretty appealing.
So the open question isn't just about the technology anymore. It's whether a regulatory hurdle has effectively become a competitive advantage. How does a startup without that level of government focus prove its own safety in the same way?
And on the technical side, how much pent-up demand from Azure customers is about to be unleashed? We're about to get a real-world stress test of what enterprise-scale distribution for a frontier model actually looks like.
Meanwhile, Ant Group's AI unit announced an advancement in a completely different area of AI today: robot sensing.
Right, moving from the world of bits to the world of atoms. They're being tight-lipped about the specific breakthrough, but the announcement was part of a larger technical update from the company. The focus is on giving robots a more nuanced and detailed understanding of their physical environment.
Unpack that. Sensing technology can mean anything from a better camera to something much more complex.
Exactly. Think about how you and I navigate a room. It's not just about seeing obstacles. It's about understanding textures, guessing the weight of an object by its material, knowing a piece of paper is light and a coffee mug is heavy. This is about moving robots from just seeing with LiDAR and cameras to perceiving with a richer, more integrated model of the world.
So the implication is that this could unlock more complex physical tasks, not just moving a box from A to B, but maybe assembling delicate electronics, or even assisting in a laboratory where you need to handle different materials with different levels of care.
And that's been a major bottleneck. The AI brains, the large language and vision models, have been advancing incredibly fast. The robotic bodies and their ability to perceive the world have been lagging. This update from Ant Group suggests that gap might be starting to close.
The question is, how quickly? Is this an incremental step, or is it a foundational shift that accelerates what's possible in autonomous systems?
Okay, let's talk about the story you teased at the top. Overnight, Samsung Electronics reported a record 19-fold increase in quarterly profit.
And its stock went down. The results fell short of what the market was expecting, largely from AI-driven growth. That miss is now putting downward pressure on tech stocks globally, including the Nasdaq 100.
This is such a fascinating signal. We're past the point of is AI a big deal and into a much more granular phase. The market isn't just rewarding participation in AI anymore. It's scrutinizing the return on investment.
Saying it out loud doesn't make it simpler. The company's profit multiplied by 19, and investors were disappointed. It highlights a massive disconnect between operational reality and market expectation.
The expectation is fueled by this narrative of infinite, immediate demand for AI hardware, especially memory chips, which is Samsung's core strength. The reality is that building out AI infrastructure takes time, and the revenue doesn't always show up in the very next quarter.
So Samsung delivers historic growth, but the AI hype cycle had already priced in something even more historic. It's a cautionary tale about market sentiment. Human expectation is a difficult variable to model.
The open question here is, who's next? If a giant like Samsung can miss a target that high, how many other companies in the AI ecosystem are currently being valued based on a narrative rather than their actual balance sheet?
Also in AI today, Ukraine is making a strategic shift in its AI policy.
Officials announced the country will now prioritize AI systems that can run on its own infrastructure.
It's a move to ensure providers can't restrict or switch off essential digital tools, favoring self-hosted models for government and military use.
A clear step toward operational independence and away from reliance on remote systems from major third-party providers.
So a major model deployment, a step forward in robotic senses, and a reality check on market expectations.
All driven by the same underlying technology. The question is never what the tech can do, but what we expect it to do next.